All right, so here we are. Okay, so we just finished up our transactions here. Now, this is the one thing that we didn't do. We didn't deposit the money into the bank. So, what do we need to do? You have your check register and you have your deposits. Okay? Now, in this case, if you want to, you can go ahead and put your $21,625 dollar deposit, but at the end of the day, you already did that through the bank itself. This is you doing any extra deposits after that. So it's up to you whether you wanted to start with the $21,625, but in this case, I'm just going to say, you know what? Today's the day that I'm going to deposit the money, right, that I earned from the sale, okay? Because again, when you deposit the money, when you open up your checking account, that's already given. You don't need to report that, all right? Because you're already at the bank. So in this case, right, my receipt that I got for the sale was $2,000 cash. And because what I choose to do here is I am going to make my deposits at the end of every day, not the end of every single transaction, because think about it in real life, okay? Are you going to go to the bank every single time you receive some kind of dollar? Some kind of money, so any kind of form of money, whether it's a cash, checking, or anything like that, or a check or a credit card transaction. Are you going to go to the bank as soon as you receive that? No, probably not, because again, right? If you got someone like Bob Mason who's trying to run a business and he's got nobody to run his business, right? He hasn't even employed anybody. Do you think that's possible for the owner to just walk out of the store to go to the bank and deposit money right then and there? That is, good for him, but at the end of the day, he's going to lose out on sales because no one's going to be running his shop. So at the end of the day, that's what I'm going to say is I'm going to save it to the end of the day. And because, again, that is the end of the day, we can go ahead and safely deposit that money. So again, eventually, this money will show up in your checking account. But for now, again, because, let's see, what day is it? It is Tuesday. It will show up the next day. Okay? Usually it's 24 hours or... but if it's on a weekend, it won't clear until Monday, the next business day. So in this case, I deposited my money for $2,000, okay? And that's what I need to make a record of, that I deposited this day. Now, of course, this is very bare minimum of, my deposit slips. If you want an actual deposit number, you can assign one. If you want, like the date that you received this money, you can create that. It's up to you. Not necessary, just because, again, we make the deposit, it's already clear enough. And if you need a reason of what this deposit was for, or a reason where you get this money from, like a note, you can add columns and expand your tables to make it more informational for you. But in this case, all I need to know is how much money I collected, how much am I going to deposit? Straightforward. And the date that you deposit it. Right? Straightforward for here. So in this case, I received $2,000. I chose today at the end of the day of June 4th. So that means I should be depositing a total of $2,000. Straightforward. Okay? So let's go back to our journal. So now that we completed our journal, we completed our ledger, and we did any extra, things that we need to do to finish off this transaction, such as deposit the money, we are done with this transaction. Okay? So then now we can move on to our next transaction here, which on June 5th, you decide to pay rent to landlord properties, okay? And again, this contract was contract number 123654, okay? And this contract says that you are going to make a payment for a total of 4 months worth of rent, okay? And of course, you have to have a security deposit. And of course, you must also... in this case, you're paying 4 months of rent and you need a security deposit. Okay? So now that is going to be there, now, when we decide to actually understand the difference of current expenses versus prepaid expenses or prepaid accounts, right? We have to understand it like this. When we record our expenses, expenses are only for the current month or the current accounting period. So as I mentioned you before, right, my accounting period for this particular business is going to be on a month-to-month basis. So I will be recording expenses that only occur in June. And on top of that, I've also am paying 4 months, right? If I'm paying a total of 4 months, right? 1 month is going to be going for June. Then I have rent for July, August, and September. We call that prepaid accounts because in this case, I'm making a payment for an advance payment for services that haven't happened yet, right? So in this case, this is considered an intangible asset because I own the rent for the month of July, August, and September because I've already paid for the service. Okay? All right. So in this case, I have 3 months worth of rent that I paid already, and I have to pay for the current month, and I also have to pay for the rent deposit, which is usually, the rent deposit is usually 1 month's worth of rent expense. Usually that is the rent security deposit is always in case, oh, what if you short this month and you can't pay for rent? Then that's what the deposit does. Or let's say something happened to the house, right? That deposit will pay for anything that needs fixing, okay, due to your, what you did to the house, right? The owner doesn't pay for the fixtures in the house unless it's their fault or they just need to update it, right? So again, usually these deposits are very rare to get your money back for, but in this case, it's usually a month's advance worth of pay. So in this case, right, each month for rent is going to cost me $1,500, right? A total of 4 months was $6,000, okay? So I need also include a month's worth of rent as a deposit. So in this case, I'm spending a total of $7,500. And I'm going to be cutting my very first check, okay? So I identified 3 things, right? I identify that 1, I am paying for rent. I'm paying rent for the current month, $4,500, so that's rent expense. I'm paying for 3 months of worth of rent for the future, so that's considered a prepaid account. And I'm also going to have to pay for a rent deposit, which is 1 month's worth of advance. So in this case, I need to check my chart of accounts to see if I have all 3 of these accounts that exist. And of course, my checking account is going to be last because I'm going to be cutting up my very first check. Okay, so let's take a look at my chart of accounts. Okay, so chart of accounts. Okay, here, do I have rent expense? Yes, I do. It is account number, I lost it. It is account number 62,000. Okay. Do I have any deposits and any prepaid accounts? Yes, you do, right? Prepaid accounts is 18,600. Deposits is 18,700. Okay, and of course, I have my checking account, which is right here, 10,100. So I'm going to go ahead and pop that into my journal. Today is June 5th. Okay, I'm paying for rent expense. Okay. Which is account number 62,000. I am paying for prepaid accounts for the prepaid rent for 3 months, which is account number 18,600. And of course, I made a rent deposit, okay, which is account number 18700. And of course, last but not least, those are things I acquired and things that I spent. Now in this case, I also am spending my money. So therefore, I need to decrease my checking account because I spent money. I decreased my cash flow in my bank account. So in this case, I am going to be decreasing my checking account, which tells me I need to credit my account. Okay. So as I've mentioned before, right, each month of rent is $1,500. So you got the deposit there. You got $1,500 for the current month. Okay, and of course, I bought 3 months of worth of rent for $45,000. So let's go ahead and do my equal sum so I don't have to check if my debits match my credits. Afterwards, I can just simply do this to see if my total debits is going to equal to my credits. So in this case, I have a total of $7,500 as my credit, and that matches the information on my sheet just accordingly. So in this case, I'm making a payment for $7,500. Okay? So there's a few things and a few steps that we need to do. So first off is I need to cut my check. Okay? All right, I need to cut my check. So down below here, you should have your check register. Right? So the very first thing I have here for my checking is what date did I cut this check out for? I did it for June 5th. So this is my very first check. So my first check number is going to be 1501. And what is the amount? It was for $7,500. And who did I cut this check out to? All right. Who did I write this check out to? Landlord's properties. Okay, so I'm going to type in here that I wrote it to landlord's properties. Okay. All right. If for any reason you need to make a note section on here, go for it. In this case, this is good enough information. I don't need to write why I wrote a check out to landlord properties, but if you need a reason to justify it or extra notes like in a real check register, right, you would have the notes to why you wrote the check out. You can also insert another row here or another column to justify why you wrote this check out. Okay? But the information I just need to get away from this is what was the check number that I used to pay landlord properties. Okay? In this case, I wrote check number 1501. This is very, very, very important because this is your paper trail. This is your way to keep track of where your money is going, because when you do your bank reconciliation, right, and you compare your checks versus what you actually spent and your bank account, right, on your bank statement, you can see if landlord properties deposited your check or not, because it would clear on your bank statement. So again, this is very important information that is going to be used on your description. Okay? So here I have everything that I need to fill in my description. First thing is, who did I deal with? I dealt with a vendor, right? That should be the important information for this transaction is I dealt with landlord properties. Okay? Okay? What did I do? I paid for 4 months of rent and rent deposit. Okay? And what else did I have here? I also cut a check for the money, which was check number 1501. Okay? Right? So that is pertinent information. That is very important. That connects the transactions to each other. So in this case, I wrote a check number 1501. Okay? Right? Now I am completely done with this transaction. Okay. So what do I need to do next? I need to go to my ledger. Okay. So ledger's this one. All right. I'm going to go to my checking because that's the first account. Or no, actually, no, that's my last account. My rent expense comes first. So expenses, again, I'm going to locate my operating expenses. And let's see, let's locate my rent expense account. Account number 62,000. Here it is, rent expense. Okay. Here is where you can elaborate your expenses or your notes here. So I could say right here that I paid for rent for June. Okay. Post reference, once again, is your general journal number 1. And I spent $1,500 to get rent to operate my business. Okay, so there you go. I paid Landlord Properties $1,500 to rent the shop. Okay. Okay, so the next account I have here is prepaid accounts. Okay, so that is an asset, right? It's an intangible asset because can you physically touch rent? No, you can't. It's a contract that you purchased, right? You purchased that you are contracted by Landlord Properties to pay for 4 months of worth of rent. Okay, so in this case, no, that is definitely not something you need to, let's see, prepaid rent, right, is an intangible asset because you are owed rent from Landlord Properties. So we're going to scroll until we find prepaid accounts. Okay, so it should be all the way at the bottom of this. So here you have miscellaneous, you have your goodwill, your deposits. Here is your prepaid accounts. Okay, it is 6/5, and what you're going to write here is I paid for 3 months. Okay, advance. Okay, rent. Okay, so that means I paid for 3 months of rent in advance, and I'm going to go ahead and disclose that this is $1,500 per month. Okay, all right, and this is still general journal number 1. Okay, and because this is acquiring an asset because we paid for services that have not been done yet, so in this case, because we made an advance payment, that's going to be something that we own. We own the rent for $4,500. Excuse me. Okay. Right. Last but not, or I guess not the last one, but in this case, I also have a deposit, right? I had to deposit 1 month in advance for rent. So on June 5th, I'm going to have a rent deposit. Okay. We are still on journal number 1. Okay. And this deposit, right? Can you actually physically touch a rent deposit? It technically is cash, but again, what is the purpose of this deposit? It's a security deposit, right? To ensure if you need to pay for rent or if you have any fixtures that needs to be, or damages that needs to be fixed, right? That's what this money is for. So can you actually physically touch this money? No, right? This is a rent deposit. Okay, so in this case, it's going to be considered an intangible asset. Okay, and once again, I'm going to format this. Okay. Then the last thing I have here is I cut a check. All right, so therefore, scroll all the way up at the top of your assets, and here's my checking account. So again, 6/5, so June 5th. Now, in this case, my description or my notes, all I need to put is what the check number is, because the check number can also be very powerful information, right? I can easily just go ahead and locate my check number by going to my check register, and this is going to tell me everything I need to know about that check, right? It's going to tell me the date that I wrote it on. It's going to tell me who I wrote it on, and of course, if you have that notes, it will also tell you why you wrote this check out. Okay, so in this case, the only information I need to know here is just what was the information on this. So in this case, I cut a check number 1501, okay, and that's all I need to put there. Everything else, right, you don't need to put the person because, again, if you look it up, you know exactly who you wrote that check out to. All right, general journal, once again, we're on our first one. And this time, right, am I debiting or am I crediting my account? In my journal, it says that I credited my account for $7,500. So the minute I press enter, it's going to calculate my number. Since I put the formula in there that I will only increase my checking account if I have a debit account. I will decrease my checking account if I have a credit account. So in this case, my bank account went from $23,625, and because I wrote a check and put it on the credit side for $7,500, now my checking account has dropped to $16,125. Okay, so again, this is how we use the ledger, because then now I can say to myself, okay, I can still continue keep writing more checks if I'd like, because I should have $16,000 left in my bank account. Okay? All right. So that's the purpose of a ledger, is to know what your account balances are at all times, especially your checking account, which is going to be something major, because you always want to know how much money you have on hand at all times without having to check your online banking at all times. Okay? All right, so there you go. This transaction is now complete, right? We did our rent expense, we did our prepaid, and we also did our deposit as well as our checking. Okay? Now, that is everything that we need for this. This is where, if you take a look at your notes here, tells you that you need to go to your subsidiary ledger, because this time we involved with a person. Now, this person is going to be called a vendor, right? Someone who supplies you, someone who has services for you. You bought into their services. So they are someone who you either, again, a supplier, a person that you buy from for any reason. Okay, so in this case, this is where we're going to finally be introducing you to the subsidiary ledger. Subsidiary ledger is going to involve anybody and everybody that is part of your business. So typically, they're going to be your customers, right? So here are your customers, your vendors, so people that you buy services or buy products from, suppliers, etc., etc., etc. These are all the vendors that are listed, okay? And of course, this also has your employees. So yes, we will be employing somebody, okay? But I've also included 1099 workers. So again, people who are commission-based workers. Yes, we will hire somebody who works for us for commissions, right? Now, of course, because we're dealt with a vendor, right? The most important thing that you want to put in here is any crucial information that is pertaining the transaction. So instead of having a notes to the financial statement, the best next thing is going to be your ledger, because you can put any kind of note in regarding to this vendor. So let's see, this is also in alphabetical order. So landlord properties, okay, LV, here you go, landlord's properties, here they are. The date that you talked to them and paid them was June 5th, okay? Now, other notes that you want to put in here, you don't need to write landlord properties because you're already in that vendor's profile. What other information do you need to collect from them, okay? If you need to collect their address, that's what the top line is for. In this case, we don't really care about that. What other information that's pertinent to this transaction? Well, we signed a contract with landlord's properties, right? What was that contract number? Okay, that's going to be more or less the invoice number, right? Because the invoice number is going to tell us what the amount that we owe. So in this case, that's going to be something that we need to put in here is the contract number, okay? Other than that, right, so we do have a contract number, okay? And what is it? Okay, right?
1, 2, 3, 6.
5, 4. Okay, so 1, 2, 3, 6, 5, 4. Okay, that's the contract number. Okay. What was the post reference? Once again, this is referring to where this transaction happened in your journal, right? You don't put your account numbers in here. That makes no sense, right? So in this case, when was the time that I signed this contract and paid them was on general journal number 1, okay? That's where the transaction happened. Now, terms. In this case, there are no terms because I didn't owe them anything, right? In fact, I paid them and I paid money in advance. So in this case, there will never be a bill of what I owe them because I already gave them money. So in this case, no terms here, no discount due date, and of course, no due date because you already made the advance payment, right? But for any reason that you do have that bill that basically tells you, okay, well, this is this month's rent, but you already paid for it in advance, then it will give you the billing information telling you that you owe $0. Okay? So no due date there necessary. Okay? What about a prepaid amount? Do not confuse this column because yes, we did pay rent in advance, did we not? But that's different because we didn't pay them before the contract was signed. That's what this prepaid amount entails, is that if you met them and you made the contract, did you pay them in advance prior to making this conclusion? No. We came to the conclusion and now they billed me saying you owe me $7,500. Okay? And that's what we need to record is that we did receive the bill, right? The contract says that you are owing $7,500, right? You didn't make any down payments or any prepayments, and that's what this column means is if you made a down payment, you didn't. Okay? Okay, so I want this to be like this, right? Now, did we already have any returns and allowances? You technically will not have a returns or allowances when it comes to dealing with your landlord, okay? Do you get a discount? Good one. You will definitely not have a discount when it comes to landlords. And did you make a payment? Yes, you did. And what was your proof of payment? I wrote them a check number 1501. Okay? So therefore, that would be my proof of purchase. Okay? So therefore, that means that's other information I do need to make a note of because that's very important that you need to know that why did you pay $7,500? Okay? So in this case, I could make that note saying, well, I actually paid 4 months, okay, of rent, okay, and paid deposit. And you could say it was $1,500 per month, okay? And of course, you can even include the check number that you wrote because you said you made a payment. How? What's the proof? I cut them a check for $1,501. Okay? So now here's another formula that you need to also know because this applies to vendors, customers, and so on and so forth. We need to know in this accounts payable column, okay? Because this is going to allow me to rack up and tally up my totals for my accounts payable. But in this case, here's what we have to understand, okay? Again, you're going to do equal to activate your formula. What was the original billing amount? In this case, what was my invoice amount? Well, they said that I owed them $7,500, okay? Anything that reduces the invoice amount is going to be any prepaid amounts, any returns, any discounts, and of course, any payments. So if that's going to take away my original invoice amount, then I need to do my formula accordingly. I'm going to start with my invoice amount, right? I'm going to subtract any prepayment. So any down payments will go against the invoice, right? Right? Any returns, right? If I end up returning something, of course it's going to decrease what you owe, right? And of course, any discounts. So if you had terms, right, that means you must be discounted for that amount. And of course, last but not least, if you paid for things that you owe, obviously that's going to reduce your amount that you owe. In this case, once we do that, so so the formula is invoice minus prepaid minus returns minus discounts minus payments. Enter. And therefore, I owe landlord properties nothing. Okay? And if you notice this is the accounts payable, right? That's true. I paid for what what they billed me for, which is the invoice before $7,500. That was the contractual agreement, and I paid it right then and there. Okay? So this is pertinent information, especially when you decide to start using the accounts payable and you end up racking up your bills and you end up noticing that now you owe more and more and more money. Okay? And of course, this is every piece of information that you need in regards to this, because what if one day your landlord says, hey, it's July, you need to pay for rent. You can always pull up this contract, right? Contract number 12364 and tell them, hey, I agreed to you that I paid 4 months in advance. It's only July. You can't charge me yet. So that's what this also does too, is it gives you a means to keep track of your transactions, but also for any reasons that you need to bring it back, you have the proof, you have the information, and you know exactly what to look for. All right. Okay. Any questions in regards to how to use the subsidiary ledger? No? Okay. So now that we did our journal, we did our ledger, we complete our sub-ledger, and of course we cut the check, we can be finally done with this transaction. Okay. So then let's see what has happened next. Okay. So in this case, right, on June 5th, you decide to hire Kim Robinson, for an interior design consultation. Okay? You hired Kim Robinson to do some interior designing consultation. Okay? Do I need to record this transaction, yes or no?
Oh, there's no amount.
Correct. We just hired them. She did not bill me. She did not give me a quote of how much the consultation is going to cost because she doesn't know, right? She'll bill me and then I'll know. Or in this case, of course, you'll get the quote ahead of time, like, oh, what's your rate? You don't hire somebody without knowing a rough estimate, right? But in this case, a rough estimate is a rough estimate. It's not what actually happened. So in this case, I don't have any information. There's no transaction. No money was exchanged. All I did was simply hire her. No transaction necessary to record. Okay? So then that very same day, you decided to go to Computers R Us and decide to buy a computer and printer. So you can go ahead and use softwares to create your invoices and so on and so forth, okay? Maybe you want to purchase QuickBooks to keep track of your company, okay? And create those invoices. So in this case, so when I went to Computers R Us, here's the receipt, okay? I paid it on June 5th, okay? Other things that happened on here was we purchased the computer system, which came with a printer. So the computer cost us $16.95 and the printer cost us $350, right? We're not just going to get a standard printer. We're going to get an office, an office heavy-duty printer, okay? And of course, our subtotal came out to be $2,045. And of course, because we went to the store, we were subject to have to pay for sales tax for 8.25%, which gave us a total of $168.71. So in this case, the grand total came to be $2,213.71. And we paid using check number 1502. Okay? So in this case, a lot of mumbo jumbo came on here. So what am I going to do? How am I going to record this transaction? What did I buy? And so on and so forth. Okay, how would I record this transaction? What did I do? You bought a computer system, right? You bought a computer and a printer, all right? How did I pay for it?
With a check?
That's one thing we got to check. So let's go ahead and check our chart of accounts. Do we have anything that's reflecting a computer or a printer? Let's see. Do we have any of those accounts that tell us that we bought a printer and a computer?
Yes.
Yes, we do. We bought some office equipment. So in this case, office equipment, computer was office equipment number 14010. And I also bought a printer, which was 14020. So that is exactly what I'm going to record in my journal is I acquired some fixed assets, right? So therefore, I increased my assets because I purchased a computer and I purchased a printer, okay, account number 14010 and 1420, okay? And of course, how did I pay for it? I used my own checking account, right, because I cut them a check. So therefore, I have my checking, okay? 10,100, okay? So in this case, right, I know one thing for sure. My total amount that I cut my check out was for $2,213.71, okay? Now, in this case, how much was my total printer and how much was my total computer? What was the total cost of purchasing my fixed assets?
The Total for everything?
71.
Okay, that's the total that I wrote my check out for. But in this case, I have an account for my computer and I have an account for my printer, right? These are two separate fixed assets because at the end of the day, what do I have to do when at the end of the month, what do I need to do when I have my fixed assets? I have to depreciate them, right? These are two separate fixed assets. So therefore, I have to separate them. Okay? So in this case, how do I figure out how much my total computer is and how much my total printer is?
It says on the receipt.
You look at your,
Okay, so how much was my computer?
3,600.
Okay, how much was my printer? $350. Now, if I add these two numbers together, is that how much I cut my check out for?
No.
What do I do with the tax?
separate your taxes for each one.
Yes, you need to separate the taxes because remember, what is included in the total cost of a fixed asset? It's going to include the purchase price. It's going to include shipping and handling. It will definitely include sales tax if you are charged. Especially for buying fixed assets, you're going to be 100% charged sales tax. There's no sales tax exemption for purchasing fixed assets. So in this case, you need to include the sales tax. Now, how do you split the sales tax? How are you going to split the sales tax?
They're the same rate, right?
They're the same rate. Yeah, it's still 8.25%.
Okay, so then you just take each, multiply the amount of each item by that amount.
Excellent. Good. So in this case, if my computer, right, let's do one row or let's do one. Okay, so the computer was 1650, right? And the printer was 350, right? Oh no, 1695, excuse me. 1695 was my printer, right? And let's see, if I multiply it by 8.2%, right? 0.82%. Right? That's going to give me, oh, whoa. Okay, let's do this times 0.0825%. So I get $139.83. Let's also do that for this. Okay? So how much tax can I actually put onto each one? Say that again? Okay, so good. So if I do this, so this is, what is this? 139.80. You say 84 cents? Okay, so 13984. Okay. And then what about down here? How much tax am I going to put into the printer? $28.80. $88. Okay, so you say $28.88. Okay, so that means my grand total, if I add the taxes to each one, this is what's gonna be. So it's gonna be, okay, so I have 1834.84, and I have 387.88. Now in this case, my total came out to be 2213.72. Is that how much I paid for it? You're a penny off. So let's go back to those numbers again. Let's take a look. Okay? So again, if I recalculated this amount by 0.085, right? Or whatever the tax is, times 0.0. Let's take a look at the split penny. Where can I add that penny to? Because in this case, I am off by a penny. Now let's take a look. Okay? You have 838 versus 875. Which one are you going to most likely put the penny in?
For the printer.
Why would you put it for the printer? You have half a penny.
It's actually, like, I'm looking at it, and it looks like one's a 3 and one's a 7, so the one's weighted towards the greater amount.
Well, in this case, it's 838. You're looking at the wrong number.
Yeah, I'm just saying that yeah, well, it's like.
Oh, okay. I see what you mean. One's 83 and one's 87. Okay, so that's your justification. Okay? That you're going to put that extra penny towards the printer. Okay, in this case, if you look at the decimal places, right, you have 83.8. You have an eighth of a penny, or 80% of a penny. Okay? Versus you got 28,875. You only have half a penny. So where would you distribute that penny if you have an
83, 84 cents, and the other one's, you know.
yes. In this case, because you have
More.
you have 0.8 of a penny versus 0.5 of a penny. You have 80% of a penny versus 50% of a penny. Which one's more?
80%.
Exactly. So in this case, it makes sense that you're gonna choose the one that has more. This split penny has an up and down to it, right? This split penny will drive a lot of accountants very crazy because that's the thing. Are you going to choose to round up or are you going to choose to round down? Rule of thumb is you should always round up, but in certain occasions like this, is it even worth it to round up for this? No. Because then you're creating an invisible penny out of nowhere, where you have something that has more than 50%, and that's the one that you should increase. Now, also rule of thumb here is, if you actually take a look at it, look at your computer. Your computer obviously costs $1,695, compared to your printer is only $350. Where do you think is going to be more tax going to be put on?
Computer?
You're definitely going to put more tax on the printer. The computer, because it's $16.95, right? It's way more expensive. And with a rate like that, that just makes it more justifiable saying you should put the penny towards the more expensive item. So in this case, I'm going to round up my computer by that penny. So I'm going to round up to 94 cents, while my printer, since it's just a measly half of a penny, I'm going to choose to round down. So this is going to be 3787. And that will give me the penny distribution that I need. Okay? And because if you buy things together, right, you're taxing it at a whole amount, not separately. So that's what you have to understand too. If you went to the store and bought the computer, right, and then you bought the printer separately, then yes, you will get a total of 72 cents versus 71 because you're paying for them separately. In this case, we're combining the total and you're getting taxed at the grand total, not by individual. So that's where you have to know, why is this split penny so important? Okay? This is how it's being taxed. That is, it's not looking at the individual price tags, it's looking at the grand total amount that you've accumulated. And that's good. So the value of that is going to get taxed. Okay? So there you go. We figure out what my numbers are. So that means I purchased the computer at a grand total of $1834.84, and my printer cost me $378.87. Ooh, that was tough to read. All right, so now that I got everything here, right? What's the next step I should do? Since I already took home my computer and my printer, right? I am missing something that I don't have, that I shouldn't have. What is that? Okay, I'll give you the hint. We cut the check. You don't have check number 1502 anymore. It's gone. It's already been given to Computers R Us. So in this case, that's the next step we need to do, because we need to ensure that we cut them a check for the amount of $2213.71. And who do we cut this check out to?
Computer R Us.
Computers R Us. Okay? Computers R Us. Okay? So there you go. There's my check for 1502. Okay, so now I can go back to my general journal and I can finish off my description. Okay? Because yes.
And for the printer, does it matter if it's printer or office supplies? It doesn't matter.
In this case, a printer, it's not, I mean, in this case, yes, you can use a office printer as a supply, but in this kind of case, right, what does a printer serve? Does it serve to actually help you operate your business, or is it something that you just use and throw away? In this case, right, the way that we justify it is, well, the printer, we can keep reusing it and using it and using it and using it. Where supplies, you use it, it's done. Okay? Printers, right, they also have a feature which tells it it's a fixed asset, because a printer will have a life, right? When you use it and open up the box, it's not going to give you, a year's worth of life. No. Printers have an estimated useful life, and that's what makes a fixed asset. That's one of the key components is it should have a life.
Okay, I didn't see it in the chart of accounts at first, but I see it now.
Oh, okay. All right. Yes, it's account number 14020. But yes, in that case, if you want to, if you think buying the printer could be just a mere expense to the company, you can justify yourself as that as well too. Saying this $300, right? It could be simple business expense because we're gonna buy it and then we'll call it a day. We don't need to depreciate it because maybe it's not worth to depreciate, right? That could be in terms of materiality, right? So if you remember that lesson, if you buy a $5 trash can, is that something you want to depreciate at the end of every single month? No, right? You can just write that off as a simple office supply, or you can use that as an expense to your company. But in this case, a printer is very valuable for Coffee Cafe because we're going to be using it for the essence of printing out invoices. But also, when we use this printer, right, it will serve us a long time. Because think about it, we're a small business. How often are we going to actually be printing out invoices when right now we have 0 customers? So if you think of it in that aspect, again, depending on what kind of item it is, it's going to be up to the boss and up to the accountant to determine whether it should be a fixed asset or a mere office supply, or it could be just an expense to the company. In this case, I'm going to treat this as a fixed asset because it will definitely serve me for a long time. It has the key features that it has a life, okay, right? It has a life when I open it and use it, right? It will last me 10 years, okay? All right, so that's just justification for why this would be a fixed asset. Okay. So there you go. Computers are us is what we bought. You don't have to necessarily type in that you bought a computer and printer because it's already straightforward. You already acquired those assets, so you don't need to reiterate things that you already know. So what I can say here is, well, then I can at least say I cut the check out 1502 to pay for it. And that should be all the information that you need. So here it is. There's the journal. Computers are us. Checking. Computer, printer, and checking. Okay. Check number 1502. So now that we finished our journal, we already finished cutting out our check. So let's go ahead and plug it into our ledger. Okay. So in this case, we have an asset, computer, right? It's a fixed asset. So we're going to locate that under our office equipment. Now in this case, of course, you can, if you want to, you are not obligated to use sub-accounts if it's not necessary, right? You could easily journalize this as a regular office equipment. But when you do depreciate it at the end of the day, right? And you need to make a huge reference points between it because you acquired specific assets, well, then you're just going to end up depreciating office equipment in general, right? You can do that. It's not wrong, but because I want to be very, very detailed in my transactions, I'm going to split my main account of office equipment and say, well, I have a computer and I have a printer specifically. Okay? That's all that this serves to you here. Okay? So office equipment right here, computer, right? We bought it on 6/5. Now, your details of what you want to add in here is up to you. You could say that you purchased it for the original of 16, right? It cost you $16.95 plus 8.25% tax, which yields you what, $139.83 or 84 cents. Okay, I think so. It's $139.84 for tax. Okay, to justify you that you had to pay some taxes for this. It wasn't just the amount that it was for the amount that it was for. Okay, we're still on General Journal number 1. Since we acquired the asset to be a total of $1834.84, therefore, I have a computer worth $1834.84 in my books. Okay. And of course, you're gonna also do the same thing here, right? You're going to fill in the same information in your printer account here. So 6/5, right? You purchased this printer for $350 plus 8.25% tax, which came to a total of $38.87. Okay? Which again, actually it's $28.87, $28.80. All right? Which is going to be post reference, right? We did this on Journal number 1. And the the debit is going to be for $378.87. Okay? And of course, that's going to have your account balance at $378.87. Okay? Now that I acquired my assets, I need to now update my last account here, which is my checking account, because I cut a check. Okay, so therefore I decrease my checking account. Okay, all I need here is just my check number, because I can retrieve the details in it later. This is general journal number 1 still, and of course I cut the check for 2213.71. Okay, because that's what I have it in my journal. Okay, so make sure you're copying it from your journal and you're plugging it into your ledger accordingly. Okay, so now I went from 16,125 all the way down to 13,911.29. Okay, I decreased my cash flow because I wrote a check. Okay, all right, good so far? So last but not least, I also need to do one thing because I dealt with a vendor. So I need to go to my subsidiary ledger. Okay. Subsidiary ledgers, once again, are going to be in alphabetical order. So here's Computer R Us. Okay, today is June 5th. Any notes that you want to put, we can elaborate that later. Okay, invoice number. Was there an invoice number in this case? This I bought it from the store, so this will be a sales receipt number. Okay, 84143 is my sales receipt. Okay, now what's so important about having this receipt? Okay? What's so important about having this receipt?
Maybe it might be defective or there's something we didn't notice at first.
Exactly, right?
Back to them.
Saving your receipt is going to be 1, proof of a transaction, but 2, in case you need to return the product. Okay? That's a very key thing here. That's why accountants, right? The number one thing that we need to do is you need to save every single receipt, every invoice, everything, because that's proof that a transaction has happened. And for any reason that you need to return a product, you have proof that you bought it in the first place. So in this case, okay, post reference is 1, terms. I bought it in store, so therefore, there are no terms. Okay? Did I make a prepayment? No, I didn't. I did not drop any down payments for this. What was my sales receipt amount? It was for $2,213.71. And did I get a return? No, I have not returned it yet. Did I get a discount? That doesn't apply, especially if you have an in-store discount, because this discount is more for when you do get terms. Okay, so no discount there. And did I pay for it? Yes, I did. I paid the $2,201, I cannot read, $2,213.71, okay? I paid that using check number 1502. So in this case, right, what are some pertinent notes that I can put in here? Well, here's one for starters. If you decide to ever return your items, right, you can at least recognize that, well, my computer right now is worth $1,834.84, plus my printer, okay, is worth $378.87. Okay, because when you do return, what do you get? You also get a portion of your tax money back. So that's key here, that I paid for this, so that means if I end up returning my computer, I should get $1834.84 back instead of the $16.50, right? In this case, I get the portion of my sales tax money back. And of course, now that I listed that, I'm also going to say that I paid with check number 1502. And that should be sufficient enough. Okay? So then now let's figure out this number here. Let's figure out how much I owe Computers R Us. In this case, let's practice this formula once again. You're going to start off with your equal sign to start your formula. You're going to start off with your invoice amount. So this is what you owe, okay? Anything that decreases your amount that you owe are going to be your prepaid, your returns, your discounts, and of course your payments. So in this case, right now that I have my invoice amount there, I'm going to subtract any prepaid, subtract any returns, subtract any discounts, and last but not least, subtract any payments. So if I go ahead and press enter, so once again, formula is invoice amount, subtract prepaid, subtract returns, subtract discounts, subtract payments, enter, and now it tells me that I owe Computer RS nothing. Okay? All right. And now this transaction is done. Okay? So again, we're going to be practicing this formula over and over and over again for all your accounts payable. Okay? And then when we come to when it comes to the conclusion, when we interact with a customer, we'll do the accounts receivable portion of the formula. Okay? So there you go. If you want to go ahead and copy that formula in every single person here, you can. We might not use everybody in here. So again, if you want to do it as I go, it's much more easier. Okay. All right. Any questions in regards to this? Because I will stop here for today. So when we come back, we'll finish up June 5th. Okay. We have some more payments we got to make. But we're going to stop here for today. Any questions?